You ever wonder how people seem to magically find the perfect price to buy their stock or crypto? It's not magic, it's just human psychology. They're able to look at a chart and find the price levels that people generally agree on. How do they do this? By the end of this video, I'm going to show you a simple method to find these price levels that people agree on using simple local support lines. Let's begin. Let's start with Bitcoin. Bitcoin has been falling down, and you can see that Bitcoin has gone from 126, almost a 36% drawdown. A drawdown is a decrease from its peak to the very bottom. And it looks like it touched 80,000. Now, just FYI, I'm a Bitcoin long-term holder, and recently, in the past couple of weeks, I have bought a lot of Bitcoin to trade in the short term. So while I'm holding long-term positions, I've also traded short-term positions to take advantage of the volatility. And as you know, cryptocurrency is very volatile, meaning it has big up and down swings. Here's a chart for Bitcoin, and we're going to take a look at different price levels. So if you have cash and you're ready to buy Bitcoin, what is a good price to buy it? How do you know what the good prices are? And today we're going to look at one simple signal. One simple way we can do this is using local support lines. Local support lines are basically areas where prices come down, hit it, and bounce off, and it doesn't break through. So, for example, if I move this down here and draw a horizontal line, that would be our support line. And you could see that the price came down, hit it, came down, hit it, hit it. Now, support lines are areas where there's buyer demand. So when the prices come down, there's buyers waiting to buy at that price, and then they'll push the prices back up. However, it's not guaranteed to hold. Prices obviously can break through and fall down further. So today, let's find local support levels that would be good buy areas where people generally agree that this is a good price to pay for Bitcoin. I'm going to take this out because our current price is here. So let me remove that. And right now we're at about 88,000. So what is a good buy price right now? I would say a good buy price would be about, here is definitely a support line right here. So we had prices bounce off here and it came down and touched off there. So 80,000, 80,000 is a round number. Rounded numbers are good support levels just because people like to round things off, and 80,000, it could be 70,000. So if we come down here, that's another rounded number. About 78,000 is a good local support level as well. I drew a horizontal line here, not because it shows prices bouncing off like it does the support level above, but you could see that the price, when the price was below it, this line became a resistance. And when the price is over, when it breaks over, then resistance becomes support. And that's why this is now support, because the price, the current price, is above the resistance line, which then flips into support. And so we have about 70,000. And below that, we have another support at 60,000. So you can see we're kind of rounding numbers 80,000, 70,000, and 60,000. And of course, another psychological price level where there should be buyer demand is also 50,000. And then take a look at that, 40,000. So this is as clean as it gets, 80, 70, 60, 50, and 40. So these are local buyer demand levels, and we call these local support lines. And we're looking at the daily chart, but you always want to be mindful of the weekly chart, W, and the monthly chart, M. Flip it back to the weekly chart because we've identified the daily support levels. And let's identify the weekly local support levels. And they should be very similar to the daily, but there may be additional support levels on the weekly chart. And it's very important to note that local support levels on the weekly chart is stronger than daily because there's more time for people to agree. And the same logic goes for monthly as well. Monthly levels are stronger than weekly, which is stronger than daily. Monthlies have a lot more time for people to agree on the same thing. On the weekly chart, we have the same local support level here, the same support level here. And so it's pretty much in agreement. Maybe we will have one at the 55 because we had some bounce action off of here. And that should do it. Let me size it down a little bit. Okay, I'm not going to get that low because once we're passing 40,000, that's kind of pushing it. And let's flip to the weekly. So the price is here, and we have local support on the monthly here as well as here. So this is a very strong monthly support, and this is another very strong monthly support. Okay, so very strong monthly support levels, 70,000. And then we have the 60,000. And then we have here 50,000 and 40,000. So the local support levels match up pretty nicely with the daily, the weekly, and the monthly. Let's flip back to the daily. And that's it. We just draw horizontal lines where the dots connect, and those are your local support levels. These are the potential buy levels when you're shopping for a better price for your stock or crypto. The last thing I want to do is add another indicator. And for the indicator, I'm going to use moving averages, the EMAs. On this chart, you can see these lines, different color lines, and these are moving averages. If I open these up, I've added the 5 EMA, 13 EMA, and I explained this in yesterday's video. Now, I know yesterday's video was a complete end-to-end 30-minute discussion of everything in packaged in one video. So it might have been overwhelming. So we're pulling back a little bit and just looking at local support levels for today. And in upcoming videos, I'll talk about the other indicators like gap fills and stuff that was touched on in the first video. If you want to see how everything works, you can go back to that first video, which I will link in the description below. But for now, we're just going to look at two of these indicators. You looked at the first one, the local support levels, and then I just drew these EMAs. Now, why did I draw the EMAs? Because the magic happens where you're combining two or more indicators. And when you combine these indicators at support levels, they become stronger. They become more reliable. They become stronger buyer demand zones because people are all looking at the same levels to buy, and they're lining up not just local support, but other indicators on top of that to increase the confidence level that these price levels will hold and they become better buy zones. Now, if we look at the daily chart, current price is here. The first buy demand zone below is 80,000, and all of the EMAs are above it. So we need to switch to the weekly time frame. And if you look at the weekly time frame, The EMAs are still above the price level. However, the 200, which is in red, is below it. And so we can say that this zone from 70,000 to about 66,000 is a good buyer demand zone. And any price in this box would be a good potential target to buy safer, to have more confidence that the price will hold. Because if the price comes down, there's local support level here. There's another support level down here. So this becomes a more reliable price level to buy Bitcoin, anywhere between 66 and 70,000. Don't forget, we're looking at the weekly. There's also the monthly. So let's switch to the monthly chart. We're on the monthly chart and we have here the 200 EMA, and that price is currently at 64,000. So our previous buy zone was from 70,000 to about 66,000. So we can expand this buy zone to about there. So now we have a buy zone from 64 to 70,000. It's a pretty wide range, but at least you know that you have a much higher level of confidence. If you were to buy in the zone, you have lots of support levels that will keep the prices up. It's a much safer trade. You'll sleep a lot better. It's much better than if you were to just randomly guess price levels. Imagine you were dollar cost averaging into Bitcoin and the prices when it reached the top was at 126 and you're thinking at about 110, wow, this is $16,000 cheaper. So I'm just going to dollar cost average here and you just keep dollar cost averaging. But you're not exactly sure why. You're just guessing. You're sort of blindly guessing. Instead, looking at support levels and matching it with the EMAs, another indicator. And there's other indicators that I will talk about in future videos, not many others, just four other indicators. But for today, we're just matching up local support levels with one other indicator. When you stack those and you find buyer demand support levels that are very strong, reliable, you are increasing your chances of buying at a much better price, at a good price that will be safer and yield more profit in the future, right? So you can buy at 80, you can buy at 70, and then at 65. And the way you can dollar cost average if you're a long-term buyer is you can do smaller purchases here, increase your purchases as you go down. And so you're not just evenly dollar cost averaging. You can do that, and that's fine. The main thing is not to lose money, to find the lowest prices and the price where the price will continue from there and continue up. Great job, everyone. In upcoming videos, I'll show you another method that you can add on top of what you learned today to find better prices to buy your stock in crypto at lower prices with more confidence.